Welcome to Buy, Hold, Sell. My name's Matthew Kidman and I'm joined by three, not two people today. John Murray from Perennial, Steve Johnson from Forager and Jeff Wilson from Wilson Asset Management, and we're talking about those stocks that have been beaten up and they're battered and bruised. Jeff, we'll start with you. Fund manager, Henderson, just a big merger with the US fund. Janus, buy, hold or sell?
Definitely buy. I mean, it will be one of the big global funds. It looks cheap on any multiple basis, and there are significant synergies. I mean, they're talking about $110 million of that's just cost synergies, and there'll be significant revenue synergies as well.
Steve, big, cheap, buy, hold or sell?
Sell. The passive trend is coming, and it's coming in a very big way for these fund managers that are offering passive products. Effectively, they're index hugging, they're charging active prices. I think these guys are front and centre. They're going to be able to cut costs for a long time. I think we've got 20 years ahead of us of that pressure on margins.
John, are you going to stick up for fund managers, buy, hold or sell?
Yeah, it's a buy for all the reasons that Jeff mentioned, but a couple of other things I would say. Andrew Formica, who very high opinion of Andrew, Australian who's been running Henderson for many years. He bought over £1 million worth of shares the other day. Always a fantastic sign that he believes in the merger. And I think, to Jeff's point about the cost out synergies, yeah, one of the things about Andrew is he's, over the years, has tended to under promise in terms of costs and over deliver.
Okay.
And I think they can do that again. So I think Henderson's a buy.
Okay, let's go to the telco market. It's been turned upside down by NBN. TPG, buy, hold or sell?
I think it's a buy, but again, it's one for the patient. I think this is a two or 3 year view. Two simple things there. We rate management very, very highly indeed. I think they've navigated that sector, as you say, a lot of change over the last few years, very, very well. And I think, you know, their ability to manage their balance sheet is second to none.
Okay, Steve, TPG, Pac-Man of the industry, buy, hold or sell?
Hold. I just don't know is the honest answer where this new NBN world is going to play out. I feel like they were over-earning in terms of margins a few years ago. Price is down a long way. I'm just uncertain about where that balances out. Stocks
halved, Jeff, in the last 6 months. I mean, buy, hold or sell?
Yeah, I'm more on the sell side. I know it's counter-cyclical-ish, maybe you're a buy, but I think the NBN is going to be, it's going to be really tough for TPG.
Okay, let's go on holidays. Book into the hotel, watch a movie, event, hospitality and entertainment. Buy, hold or sell?
Yeah, hold. It's not cheap. It's sort of, I think it's about in no man's land on about 18 times.
Cinema hasn't been so great. Hotels not so great. Buy, hold or sell?
Yeah, I'll say hold again, leaning towards a sell probably. I don't like this conglomerate model in general. I think the cinema business has had a wonderful run from putting prices up over the last 10 years really, and it shocked everyone how much pricing power they had. I think that's over.
John, I've seen you at the movies once or twice. Buy, hold or sell?
Yeah, again, taking a 2 or 3 year view, I think it's a buy. I like that tourism theme, leisure spending. Theatres, Greater Union Theatres, QT hotel chain, Ridges, Atura. They've got some diversity there. I think it's a buy on a 2 or 3 year view.
Okay, here's the chance. Something battered, knocked about. Something you'd like to tell us about, buy, hold or sell?
Yeah, sure. Yeah, Clydesdale, the demerger, Matt, from National Australia Bank, I think it's a buy. And it's fascinating. I mean, whilst it's listed in the Australian market, it's been forgotten because it's based over in Scotland. I think it's a pretty straightforward story. I think there's a very big cost out story there. The balance sheet's very strong. I think the management team is very strong compared to the size and the nature of the business. And I think there's significant ability for capital returns to be delivered back to us as shareholders over the next 2 or 3 years. So Clydesdale, or CYBG PLC as it's called.
Steve, we know you as the pain man. What's been battered and bruised that you like?
We haven't bought a new stock in the past 6 months, and there's lots of things where share prices are down. We're still not finding a lot of value in them. So I'll give you a couple that I think are worth looking at that we haven't yet bought. I think the two IVF players, Monash and Virtus, the share prices are beaten up a long way. They have some company-specific problems. There's also an industry-wide problem that I think is probably cyclical.
Jeff, what do you like that's battered and bruised, or what do you not like that you might?
No, I like automotive holdings. I mean, potentially a corporate play there long term. I think there'll be some, new CEO seems very impressive, and there could easily be some, one of their logistics division we don't think belongs with the business long term. So, and that would be a positive catalyst.
nothing that an aspirin can't do to fix some of those headaches out there for the battered and bruised.